All right, everyone. Good morning. Happy Wednesday. Sorry for the technical difficulties there. But all right, we'll jump in here. Got the CPI report this morning, and initially the market likes it. We got the S&P futures up 1.5%, the YM up 1.5%, QQQ futures up almost 2%, Bitcoin up about 2.5%, and the RUT up about 3%. So looking at the pop here, the key level I'm going to watch into Friday is 6,000. Could be a case where they flush it, they pop it back to a falling 21 EMA. If they can't get it back through that 21 and get it back above that 50, could be a case where they pop it, everything rolls over, and you're taking out that low. I'm thinking a little bit more. For one, if we can just plow through 6,000, would be pretty cool. I'm looking for, okay, if we can't get through it right now, if we do flush for a little bit, can we put in a higher low? Right, flush it, put in a lower low. Pop it, you put in a high, flush it. If we can make a higher low, conversation's sake, we pull back into 5,900, we hold it and turn the corner. I think all pretty good there for the bulls. If you are bullish or you're looking to get bullish, then what you're not looking for is we pop and then right back down she goes. So I'm going to make that level green just so the market knows what I'm looking for. And if we could get a couple good closes back above 6,000, I do think that daily squeeze gets a lot more interesting. And the thing about the pullback here, if you tuned in for Monday's session, if you look at the pullback through the lens of a 15-minute, 30-minute hourly time frame, it all feels pretty ugly. If we look at the pullback through the lens of a weekly chart, which will load up here any day now, right, the pullback on the weekly chart, pretty par for the course, just normal ebbs and flows. My definition of an uptrend is we push away from our 21 EMA, we pull back to it. We push away from it, we pull back to it. Higher high, higher low, higher high, higher low. So the pullback here, on a lower time frame, it's all pretty ugly. On a weekly chart, takes you back to support. For now, they hold it. We have a score of 12 out of 15. Not fully bullish perfectly, but pretty damn bullish. Bull trend, bull structure, and only issue for now would be that little momentum turn. But on the pullback, they don't take the weekly uptrend and throw it out the window. We get a couple of weekly closes below that 21 EMA. Then it all might get a little uglier. But for now, I'm going to watch that as what could be the low here. And then again, the key is, all right, if that is the low, S&P futures never see a lower price ever again. If we're not looking for the immediate rip back towards the highs, what are we looking for? And I think a lot of that can come from your lower time frames. If they're going to take the S&Ps from 59.70 into, all the way back up here at 61, 61.50, what we got to get on a 15-minute, 30-minute hourly time frame and up is that kind of uptrending behavior. So pretty simple way to look at it is, can we get and keep lower time frame buy signals? Right now, we're looking at a 5-minute, 15-minute, 30-minute. If we pull back a bit, do we lose them and get sell signals? If we do, might be a little tricky here. We pull back a bit, and for the most part, 30-minute chart holds up pretty good, 15-minute hourly. Couple of signs of that might have been the bottom. The initial break of the low there, and now the pop, all feels a little bit, short squeezy. That initial short squeeze move, usually pretty fast and furious. The key will be, how do we handle a dip? And I think yesterday is a decent example. Right, trap the shorts, pump it. We do pull back to that key level, and they hold it pretty good. So there is the S&P futures, and then for the NQ, pretty good pop here, also off of that weekly 21. At no point did the weekly chart look anything bearish. Trying to work through the 50. I think you watch that daily 21 EMA. The good old mean. Couple closes back above that 21. They go getting a 30-minute buy signal. They get an hourly buy signal. Doesn't guarantee we're going back towards the highs, but would be the behavior of a market trying to bottom. Right, pull back to a key level, maybe rope in a few shorts, pop it, rebuild, stabilize, and then we look to take it from there. But for the folks in my room, that's kind of been the key here on the pullback. And don't get me wrong, if you can catch a short on the Qs from 540, 530, 520 down to that weekly 21, it's a great short. Like I mentioned back on Monday, the closer you get to support, you maybe try to pay yourself on those puts. Just in case that 21 EMA kicks it up and shorts are getting squeezed. All right, so QQQ weekly gets a 12 out of 15 bull trend, bull structure, and bear momentum. Now, assuming the pop can hold here, by the close today, we should be looking at better scores. But as of last night's close, it's an incredibly neutral market. Right? If you combine bigger time frames and lower time frames. Now, maybe a handful of you here are just more so day traders. I'm guessing if you're a day trader, you're looking more at a 4-hour chart down to a 5-minute. Yeah, so index-wise, 4-hour down to a 5-minute. Little neutral and maybe a little bearish. QQQ hourly had a negative 15. 2-hour had a negative 11. If you look at our Big 10 names, yeah, for a handful down on a 2-hour, 1-hour, 30-minute, it looks a little rough down there. Microsoft not the best. Nvidia, Apple, Netflix. But then you look at the indexes, Big 10, and the sectors from a weekly chart down to a daily time frame. We haven't taken on really too much damage. Weekly charts all pretty good. 3-day time frames pretty neutral. Then you have your Broadcoms, Teslas, Googles, TSMs, Metas, Amazons. For the most part, their bigger time frames lean pretty bullish. Look at a Broadcom. Weekly chart, perfect 15. The 3-day chart, perfect 15. So the overall kind of theme last couple of weeks here is, on that pullback, yeah, take a QQQ hourly, and they're tossing that thing around like a rag doll, right? Flush it, pop it, flush it, pop it. In the short term, you follow the hourly trend, it can make for some really good shorts. Now, I think even if you're a day trader, you always want to have respect for your bigger time frames. They'll pay you a good play in it short down to that 21. But if you keep on pushing the envelope, you keep on buying puts here. Now we're waking up to a gap into QQQ 515. Flush it, flush it, flush it in one little pop. Looking at maybe about a 50% retracement. So get through today, see if things can hold. I think the good rule of thumb is if we could ever get 2 daily closes back above the 21 EMA, in most cases puts the bulls back in pretty good standing. So QQQ, we're looking at, a couple closes back above the 515-ish, 520-ish, and then for the spiders, as they call them, 59-50-ish would be pretty swell for the bulls. All right, now for conversation's sake, let's just say all of that does happen. Maybe not today, maybe not this week. But if we have found the bottom, and I talked about what will it look like if we have found a bottom. If we haven't, it'll be the opposite. We'll pull back and we're not going to make a higher low. Right? They'll keep on dumping. They'll take it back to the lows. They'll break it. It'll all be pretty evident. But if we have found the bottom, what are a few things I might want to look to buy? And, granted, if we catch a huge short squeeze rally here, then for the most part, everything should catch a pretty good bid. So, for example, take a name like a Microsoft. Here's a great example. Microsoft is gapping up $7 in the pre-market, 415 into 421. So yeah, if they can pop the QQQ 2%, pop the S&P's 1.5%, most names out there are going to catch a pop. But when I look at Microsoft objectively, it's a pretty crappy chart. -11, bear trend, bear structure, bear momentum. If anything, I could argue that Microsoft was relative outperformance on the downside. Got a little worse than the indexes. I want to look more at, during the pullback, during all the back and forth, who's done a better job of holding their ground. Better structure above their buy zones, momentum, all the above. Scoreboard says Broadcom, Tesla, Google, TSM, Meta. And then maybe by tomorrow, the Amazon. So looking at the Broadcom, and one problem I think for your NVIDIA's SMH, your NVIDIA's, Broadcoms, etc., is the SMH. Which, going all the way back to September of last year, it's a giant chop fest in that weekly squeeze. Right? They pop it, they pull it back, they pop it. I do think eventually down the road, look, you got a weekly, a 3-day, a 2-day, and a daily squeeze. It's a lot of energy getting built up on bigger time frames. So whether it's next month, whether it's a year down the road, when they begin the fire, right, daily squeeze fires, and the 2-day, then the 3-day, that should trigger a pretty big move. You don't tend to get all those bigger time frame squeezes, and then they kick off a 2 to 3% move. Right, they break it short. As always, call for a move down to about 2.5 to 3 ATR. That could be the old SMH down to 215, 200. They break it long, 290, 300. We could lean a little more bullish. 10 out of 15, bull trend, bull structure. But one problem here for the SMH, I think, has got to be that NVIDIA. That one they call NVID. Just a total chop fest as of late. So being that is the biggest name in the SMH, the 140 to 130 to 150 to 130, not much help here. But at the moment, I think Broadcom grades out a lot better than NVIDIA. Pulls back to the buy zone, brand new daily squeeze, 12 out of 15, bull trend, bull structure. Little turn of momentum. You also have a lot of lower time frame squeeze action. 4-hour, 2-hour, hourly, 30, and the 15. A little gap into 230-ish. My preference is we're getting NVIDIA back on board. Then go buy more TSM, then go buy Broadcom. But I think for now, I could watch that daily squeeze develop and then maybe wait for a buy trigger on the 4-hour, 2-hour, 1-hour, even the 30-minute squeeze. 30-minute goes bullish, hourly goes bullish. Above that daily 21 could make for a nice spot. And then numero dos is Tesla, which had an interesting day yesterday from the high of 422-ish to a low of 395-ish. Now gapping back up into 410. You do have a 4-hour and a 2-hour squeeze. A couple things you could look for here. All of which require they keep it above that 21. So one thing could be they pop it back above the 21 EMA, and then we're not quite pushing back into 430, 440, 450 too quickly. Kind of looks like if we could get a couple more days of chop around that 21, they might want to go ahead and print a brand new daily squeeze, which for me, of course, would be of interest. or they pop it above the 21 EMA and they get 15-minute buy signals, 30-minute hourly buy signals, and they're looking for a pop here in the little sooner rather than later. My preference would be daily squeeze or not. I probably have to hold off until I get a 4-hour or a 2-hour buy signal. So we shall keep an eye on the Tesla. And then next up is we'll do Google, and then we'll do TSM. All right, so for Google, brand new daily squeeze, and above that 190-ish. Now look at Google a few days ago. Perfect daily squeeze, got the buy signals trying to push. Then you pull them back to the buy zone. Right, the pull back to that buy zone. This time around doesn't really have anything to do with Google. It's just more so the market. So you're buying Google back here. You're not getting too much wind at your back from the things you need: S&P's, QQQ, Google's peers. Could they take that daily squeeze? Could they trigger a push at least back in the $200? They definitely could if we get a better QQQ behind it. So best case for a Google, best case for an NVIDIA, all the above. QQQ on the pop here. We don't completely fail, don't completely drop the ball, roll over, take out the lows. Best case for Google, all the above. By Friday, by early next week, we are getting those closes back above that 21. All right, won't guarantee the QQQs go into a brand new all-time high. But what it could do for a Google, which is held up pretty good here, is just more so stabilize the overall market. If Google can hold its ground pretty good while the QQQ is pulling back in a pretty ugly fashion, what can good-looking Google do if the QQQ is just chilling? Maybe not ripping higher, maybe not taking out the highs, but a Google might be able to work with that as opposed to the NQ taking out the lows. So if we can get that from the indexes, I think you take that Google daily squeeze, try to look for a buy trigger, and then maybe into earnings playing for a push back into 200. On paper, I like the idea. Now we got to figure out, do we have a supportive market? And then the last one here for the morning will be TSM. Now, don't forget, earnings are tomorrow morning before the open. So tomorrow morning could be a totally different conversation. But if we pretend earnings aren't anytime soon, I think a really, really good-looking 3-day squeeze. So earnings aside, I think they want to take that 3-day squeeze, and you'd call for a path into 225, 230-ish. Having that kind of setup into earnings. Where that, of course, can be really interesting is, they go gapping up TSM tomorrow morning, 210, 215, 220-ish. Might give that 3-day squeeze the nudge you're looking for. Break out, fire long, get that move into 230s. If they bomb earnings, could wake up to a 3-day squeeze firing short. Very much a binary event, but I do love that 3-day squeeze. And then the final thing I got for you, the only open trade I got in the room right now, Bitcoin futures. And we bought them back up here. We had the honor and the privilege of sitting through that flush. Got within about 500 points of hitting the exit order. But if they can hold it here, it does feel a little bit trappy. I hate these crowded level trades. Right, you're watching a low, watching that daily 50. I think anybody trying to short that break, it's a pretty obvious trade, which every now and then will work. What I like better is break the low, pop it. On the pop, they fail to get back above the low. Then I think you got a short. This feels more like a bear trap. Right, little dump, and then by the close, back above the low, back above the 50. Following day, you're working back above that 21. Today, maybe going for the second close back above that 21. From there, I think we're one MACD turn away from a nice breakout. So keeping the trade there, keeping the exit order down there at 89K, and at a minimum, trying to play for a move back into 110,000 here. Although the 2-day squeeze calls for, a little bit higher, but not too much higher. But all right, y'all, that is what I got for you. And again, the key here is going to be how do we handle a dip? Whether we keep on going higher all day long, whether we pull back at the open, that'll be the key. And if they can handle it well, and they keep, they keep the progress they're making on 15-minute time frames, 30-minute hourly. If they can put in a higher low, we might be in good shape for having put in a bottom. We get one little gust of wind and we totally crumble here, then no bottom just yet. But all right, any questions for me? Any chart requests? I've got you covered. Drop them in the chat, and I'll get caught up here for you. Hey, good morning there, Lorna. Yeah, Jay, can I review the spreadsheet? Absolutely. All right, if you look at the daily chart of the S&P futures here, hey, we got a good little crowd here in the essentials room today. That's what I'm talking about. But all right, so if you look on my chart up here, I've got that one label that says Big 3 score. Right now the S&P chart has a -3. What that comes from is my trend, structure, and momentum checklists. All right, so the whole Big 3 thing, that's a Big 3: trend, structure, momentum. So I've got my trend checklist, I've got my structure checklist, I've got my momentum checklist. Combine them, I'm looking at 15 different things. So for the bulls, the best possible score for the bulls would be a +15, meaning on every checklist, bulls are checking off every box. For the bears, of course, you want to look for a -15, right? Everything on the trend checklist, structure checklist, all leaning on the bear side. Right. From there, what I'm doing with that sheet is, I'm taking that score across 8 different time frames: the weekly, the 3-day, the 2-day, the daily, 4-hour, 2-hour, 1-hour, and the 30. Take the scores from each of those time frames, and then we're getting our total score. That gives me a good, good bigger picture view of the market, combining a couple bigger time frames, couple shorter time frames. Overall, here, what am I working with? That combination leads to the strongest score being a 120 or a -120. All right, so the QQQ with a -16 at the close yesterday. Overall, it's just neutral. Not -90, not -120, not +90. It's a -16. If I want to look for a short, maybe a Microsoft a -67 total score. Maybe looking down here at biotech -98. So that's that part of the spreadsheet. And then what I do over here with the total, the indexes, Big 10, and the sectors, I'm taking those total scores and putting them in a percentage form. Right, so think of it like a phone charger. If I look at my phone and I have 2% of my max battery, well, it's not that much. Maybe not a great analogy, but that's really helpful because I haven't been looking for aggressive shorts. Not because my opinion is we're in a bull market or we're not in a bear market. The rankings just say we're neutral. We came into Monday and our total score, which combines our indexes, Big 10, and the sectors, -10%. Tells me a couple of things. One, maybe most importantly, I'm probably not waking up Monday morning at the open and I'm buying calls here left and right. If I've got 90%, maybe I am. Then by the close yesterday, we get a little progress here. Total score improves by 9%. Indexes improve by 28%. Um, Interestingly enough, the Big Ten names drop off by about 16%. All right, but take that total score. What kind of market am I in right now? Not one that I think is great for directional trades. Day trading, yeah, but not, hey, I'm going to buy a crap load of calls here, hold on for 30 days and see what goes down. So that's been a big part of why I'm not getting aggressively short until and unless we can actually break that weekly 21. And again, I get it, 15-minute, 30-minute, hourly. They all got really, really nasty here. But I'm looking at the weekly, and we're kind of due for a pullback to that weekly 21. Nothing bearish, in my opinion, about a pullback to a weekly 21. And so far, the spreadsheet kind of communicates the same opinion. That's why I like, putting it in the color fashion here. Makes for a pretty good heat map. So you can imagine, what kind of market am I in when I'm making, my most money being long, my easiest money, everything's just lined up. It'll be a crap load of green, right, everywhere. Big time frame, lower time frame. You'll have it in the Big Ten. You'll have it across the sectors. Things probably looked like that back in October, November, December of last. So quick little rundown there for you. Hope that made sense. And I pull all that in from the watch list columns here. Okay, cool. Yeah, my pleasure. Hey, TPS reports. How are you, my friend? How's that golf? Is it too late for VST? It's never too late for love. But is it too late for VST? All right, my target would be 180. We're gapping into about 175. But then with respect of our 21 EMA, it'll be a perfect daily chart all the way back down to 155. Perfect 15 trend, structure, momentum. I don't think any of that will change on a little pullback to the buy zone. So is it too late? That's a matter of what kind of risk reward are you willing to take on. From a point to point perspective, we buy it at $1.75, and maybe you're looking for a move into 200. I would look for a move into about 180. I found that move from that 21 EMA into that 2.5 to 3 ATR level. It's usually going to be the easy cash. So I look at it and have to think, all right, well, my reward might be $5. My risk might be about a $20 pullback. And a $20 pullback just takes me back down here to support. Doesn't break structure, won't cancel that buy signal. Then I want to think a little bit more about my next 50 to 100 trades. And I know a lot of us here are doing the options, myself included, but point for point on the chart, if my next 50 trades, I'm risking $20 to make 5. I can make that work, right? I can be a profitable trader doing that, but what do I need? Think of the variables: my win rate, my size of my wins, etc. I better be batting pretty good. If I've got a 80, that might not even work. Point being, I have to be right pretty frequently. Now imagine we're the guy or gal buying it back here above that 21 EMA when you already had the buy signal. Hey, if I can buy it around 155, stop out on a move back below 150, I'm taking on $5 or $6 of risk in exchange for about $25 of reward into that target. Now I can have a shitty win rate, still be a profitable trader. And then the other thing, we just factor in position sizing. Knowing all the way up here, we might not have the best risk reward numbers. I don't think I'm going to pile in with my max size. I might take my my average size and maybe cut it in half. pull back to a 21 EMA, they hold it, and then maybe I'm buying a few more. If I'm buying it right near that 21, then I can try to size up a little bit more. So a couple thoughts for you there. And then Austin, you bought some frog yesterday. That is a jacked kangaroo in your picture there. I want to look like that guy. All right, momentum turn 21 back above the 50. You got some lower time. You got a lot of lower time frame buy signals. Overall trend and structure could improve, but yeah, you're already catching the pop here into your 200 SMA. I was gonna say back above that 21 with a bunch of buy signals. If anything, a quick pop back into 32, 33. And at least that's where the ask is in the pre-market. But that'll be a pretty big level. Over under level for the Bulls and the Bears here. And no, yeah, Claudia, great point. To buy TSM and to buy anything right now, we need that alignment from the ground up. Same goes for the indexes. We don't have problems on a QQQ weekly. We have problems in a QQQ 1 hour, 30 minute, 15 minute. Until they can improve those problems, they really can't go take advantage of that good looking weekly. So that'll be the same thing here for TSM. They can print that 3-day squeeze for another 2, 3, 4 weeks. Until we're getting a 15-minute buy signal, 30-minute, 1 hour, 2 hour, all the above. I'm not going to do too much with it. We should have more clarity here on TSM for tomorrow morning's open after earnings. For worse or for better, we shall know its fate. I'm going to jump over here to the YouTube chat. Good morning, folks. Yeah, sorry for being a little bit late there. Hey, Trip, what's going on, Trip? How are you? Good morning, Terry. Good morning, Fred. Trip, Palantir rally on the open. Not really a name in my wheelhouse, but I can definitely take a look here for you. What you'll find today, guys, is at the open, most names in the market will gap up. And yeah, you're going to have things gapping down, of course, but collectively, a lot of things should gap up with, the IWM up 2.5%, the QQQ up 1.5%, S&P's up 1.5%. Yeah. Anytime you got the indexes up 1.5% to 2%, they're going to take most things with it. But for the same reason most things have pulled back as of late, if the indexes fail on the pop here, right, can't get any higher, pull back, break support, take out the lows. Any pop you get here in Palantir today, the odds are kind of favored. They're going to fail as well. Point being, I think for a lot of things you might want to look to buy right now, your first buy trigger should be S&P's QQQ. If I'm looking only at the stock, I would have been long Google back on Friday or Thursday. Now, Google hasn't fallen apart here. Not too bad, but I'm not getting paid. If QQQ can rally for 5 days straight, I probably get paid here on Google. Indexes first, but for Palantir, I would at least look for a hold here above that daily 50. And it does look like they're going to open a little bit above that. Yeah, I would anchor to that 50 SMA here in the short term. If they're above it and they've got lower time frame buy signals printing, then I'm trying to play for a move back to my 21 EMA. Get there, get through that 21 EMA, more buy signals printing. Maybe I'm calling for a bit higher. Any point you back under that daily 50, I don't see too much edge trying to play it long in the short term. Above that 50, you could be in good shape, though. But all right, y'all, I'm going to cut you loose here. Cash market's open in 5 minutes. I got to go jump into my room. But as always, thank you for your time. Much, much appreciated. And yeah, shall be a interesting couple of days here into the long weekend. So that being said, I won't be back with you on Monday, but I'll be back with you on Wednesday and looking forward to it.